Ashwini Agarwal, founder and partner at Demeter Advisors, joins us right now on the show. Ashwini, great having you. It's been a while, but thank you so much for joining in today. Okay, I think maybe we are missing his audio. Okay, now. Ashwini, can you hear me?
Yes, I can hear you. Can you hear me?
Yes, I can, loud and clear. So, Ashwini, yeah, small things happen. But good morning, of course. And Ashwini, just trying to think, we are as much as we'd like to believe that markets में कुछ हो नहीं रहा है, etc. We are kissing distance from all-time highs yet again after a severe bout of underperformance for India as a market versus emerging markets. Are we coming out of that phase and getting into potential performance or outperformance phase? And if so, what could be the underlying reasons for the same?
Thank you, Neeraj, and good morning once again. I don't know if you could hear me earlier. I think you've made a great point that we are looking at markets trying to break out of the lethargy that we witnessed for the last 12 months. And key to this is revival in earnings led by revival in demand. Obviously, the cut in GST rates led to very strong festive season sales. And there is hope that the good monsoons, full reservoirs will lead to a resurgent rural demand as well as the second half of the year progresses. And lastly, one hopes that the India-US trade treaty will get signed in the coming weeks, and some of the headwinds that Indian exports have been facing will recede. So, that's the hope that has led to the markets rallying a little bit. But if you dig deeper, what's been happening is that there's a lot of positive sentiment on the banking stocks in particular. And of late, IT has also started participating in the rally. The idea being that with so much spending on AI, some of it will trickle down to the Indian companies as well. And Indian companies may not see a strong headcount growth, which has its own question marks on job creation in the country, but the revenue growth and margins should remain fine. So, these are the kind of mixed narratives that are helping the market inch up a little bit. From the volatility in the US that we have witnessed in IT, and that's kind of feeding through to the rest of the AI frenzy that we've seen in other emerging markets, I think that might have a less of an impact in my view on India. The core story in India will be, can we see a nominal GDP growth revival? Can we see an earnings revival? There is a hope that that will happen, but the jury is still out on that.
Okay, Ashwini, all things considered, and you spoke a bit about, the IT push, etc. We saw what NVIDIA has done. We've seen what NVIDIA has said. While it's lifted all boats in the US market perspective, for Indian IT, does it move the needle at all? What's the view of Indian IT that you have at this point?
Tamanna, I have very mixed feelings about the Indian IT pack as a whole. The larger companies have a really hard task as they manage a world in which automated code generation, automated testing takes away large chunks of their revenue pie, and they'll have to scramble to fill the holes in their in their revenues. So, the large cap IT, in my view, is still not a place that I'm terribly excited about. But in the mid cap space and smaller companies where there's ability to be more nimble, there's ability to kind of cater to the new emerging customer, I think there might be some opportunities there. Having said this, I've largely stayed out of IT for the last 3 years because in this evolving landscape, I have preferred to kind of look for ideas elsewhere. And that hasn't been such a bad thing because, IT hasn't really done much for quite some time. I think there have been select mid-cap winners for sure, but otherwise it hasn't really done much. And I'd like to stay that way because the story is evolving and it's very hard to figure out who the winners and the losers are.
Ashwini, where I know it, okay, so it may be hard, right, in a lot of pockets to do that, but I wonder if Q1 or rather Q2 results or H1 results and the commentary that has come in from select managements, so combination of these two give some bit of indication as to what the potential winners are going to be? Because, I mean, to my mind, when I was looking at the commentary, the results delivery, somehow cement, platform companies, all of them seemed very constructive on growth after having delivered a fairly decent Q2 at the very least, or actually a whole H1 in the case of cement, right? Where did you find favor on the confluence of these two things?
So, Neeraj, when I was responding to Tamanna and I was talking about the mid-cap space, I was referring more to IT. But looking at the earnings season and slightly, broader landscape, like you correctly pointed out, there are plenty of places where management is sounding very positive about the outlook. I mean, if you take a look at cement, that's one space. If you look at, finance, especially people that have exposure to microfinance, almost everybody is saying that, look, the worst is behind us. Somebody's saying another quarter, somebody's saying 2 quarters. In a really minority case, people are saying we are still working through our problems. But most of that seems to be behind us. Growth seems to be coming back in select consumer space as well. I mean, I'm hearing very positive outlook from a couple of companies. I'm seeing positive outlook in agricultural inputs, where the first half was disappointing, and that tends to be the larger half for agricultural input companies. But most are positive that the trends that they're seeing on the ground indicate a much stronger than usual H2. So I think there is positive commentary from companies in a whole host of sectors, but there's a lot of dispersion within sector. Now that's something I've not usually seen. Typically, rising tide lifts all boats, and that's sectorally very applicable. But this time around, I'm seeing a very wide dispersion of positive and negative outlook within a sector. So it's become very, very company specific, and one has to pay attention to what's happening to each individual name.
Interesting and astute observation, Ashwini, that it's not about, you have a big move for all auto or all banks, or everyone is seeing that kind of outlook. But I want to narrow down on a couple of sectors, and I want to start with the, I don't know what to call it, new tech-backed companies, platform companies, whatever you may want to call it. But I think you get the space that I'm talking about. High growth, not necessarily profitability or high profitability in sight. How are you feeling about that lot of companies?
Tamanna, you got the wrong man for the right question, because I'm a value investor.
That means it's the right man for the right question.
I can't make any sense of the valuations.
Yeah,
okay?
which is why you're the right man for the right question.
Some of these stocks have done so well, and I feel very happy for the promoters and the shareholders, but can I get myself to buy any of them? The answer is a flat no. Okay, this market reminds me eerily of September 21, or maybe, even late 99 and early 2000, where there's a select number of stocks, where there's a huge amount of paper supply, where there's just complete frenzy, and valuations don't make any sense. I don't know what's going on. I can't buy any of them, but that's fine. There are other places to look. And there are plenty of places to look. And that's the point I want to make. After a long time, I have more ideas than I want names in my portfolio. I mean, typically, I run with 25 to 30 names.
Ashwini, okay, just a counter on that. Not even a counter, but just a follow-up on that. The market wisdom right now seems to say that let's look at companies from a different lens and not from the traditional lens. Let's look at companies where technology is changing the parameters of everything. You're not subscribing to that?
No, that's true. In many cases, technology will change the way one does business. But there are a whole bunch of places where, you still have to eat, you still have to clothe yourself, you still have to use various consumer products. And I think the mode of delivery might change, the way you shop might change, stickiness of brands may change, and technology is enabling all of that, right? But the core a core activity that we do as humans is not going to change. Sure, the way we entertain ourselves might change, the way we consume a lot of products and services, the channels might change, but the products and services fundamentally remain the same. So I think that's the point that I'm driving at. That if you have companies that are making things that are useful for the consumer and they are able to adapt to new delivery channel, the new way of doing business, and still make reasonable money for themselves. I mean, and they are available to you at, in some cases, valuations which are at the bottom of a decadal range. You should look at them. I mean, this is a great time to be individual shopping. Look at 2 years, don't look at the next 6 months. And I think returns are going to be pretty good from here for a whole bunch of companies that are being ignored. I mean, think about it. Okay. 3 years ago, if anybody told you PSU banks are cheap, buy them, what would you say to them? And look at how they've done. That's the beauty about value investing and bottom-up investing.
Just as I thank Ashwini Agarwal, I just want, if our producers can get in the 5-year chart of two blue chip names, one PSU and one private blue chip name lenders, Bajaj Finance versus SBI. And I remember 2018, I had put out a tweet saying that, the ability to pick the right horse is yours. Now look at the 5-year chart of a Bajaj Finance, 114%. Look at the 5-year chart of an SBI, over 300 and some percent, 303% if I'm not wrong. Both great names. You would never find a fault with Bajaj Finance, yet as a stock, SBI, a PSU lender, has given far better returns than Bajaj Finance over the last 5 years. I think that is one of the points that I think Ashwini was trying to make. But Ashwini, unfortunately, we are out of time on this show as a whole. So I'll have to thank you. But this is such a great peg or a great lead-in into the next time that we do a conversation with you. So looking forward to that.
Thank you. Thank you, Nilesh. Thank you, Tamanna.